Hey everybody, hope you're having a great day so far. Derek here. I am the founding partner of the Polaris Financial Network and author of the book Financial Foundation System, which is available on Amazon. What I want to talk about today is the stealth tax, better known as inflation. You know, inflation's a real wealth killer. Think of your savings floating around in the ocean, growing. It's bobbing around, everything's going just fine, and then bam, out of nowhere, a great white named inflation hits you. And you know what? You never even saw it coming. The thing is, though, if you pay attention, the signs are everywhere. You know, in just 20 years, the average price of a gallon of milk went from $2.79 to $3.60. Well, that made it seem like a huge deal to you. It's still over a 29% increase. Just do that all around the grocery store. Heck, I'm a family of 5. That's significantly more money overall. Now, inflation is mainly caused by the government printing money, which is only accelerating these days. Are you aware that the government also projected inflation for 2021, the rate to be 2.24%? Do you believe that? I know I don't. What they're saying, though, is basically if you had a $100 bill today, this day next year, that $100 is only worth $97.76. The truth is, the cost of goods and services are rising much faster than we're led to believe. I'll show you some comparisons. Let's compare some prices from 2000 to 2020. The average automobile went from just over $22,000 to $39,000. The average home prices went from $161,434 to over $326,000. And health insurance went from $5,341 to over $12,000. But okay, let's take the government's number of 2.24% and say it doesn't change for the next 20 years, just flat, 2.24%, we're plugging along. This means that in 20 years, if you're earning $50,000 a year today, that you would need to earn $72,400 in order to have the same purchasing power. So for all those that say, when I retire, I won't need as much income, I'm here to tell you that not only is that incorrect, but more income will be required. So now you're probably wondering, how the heck do I get there? I have great news. There are solutions. You just have to be open-minded about them. I'm going to give you 5. Number 1, first and foremost, pay off your credit cards and auto loans as fast as humanly possible. Number 2, make sure you never borrow from them again. Number 3, with taxes most likely going up in the future, start stacking your savings in Roth accounts and cash value life insurance. Number 4, put your current savings into things like cash flowing real estate or land, stuff that's going to appreciate over time that can help you keep ahead of inflation. By the way, if you have an IRA, we can convert that to a self-directed so you can make these types of purchases. Just reach out if you have any questions about that. And number 5, build a new source of revenue. Build passive income. Why? Because if you're ever laid off your job because of a pandemic, maybe your company downsizes or goes out of business, technology could take over your job or something else that we're not even thinking about right now. You want to have that to fall back on because then you'll never be without an income source. So, hey, I hope you found this helpful. Feel free to comment. I'd love to hear from you. Share it out if you found value. And reach out to me. You can message me, and I'll put my email in the comments below. If you're on YouTube, please subscribe. And I hope everybody has a fantastic day. Take care.